What's up, traders? I'm Hotshot. I am not an educator. My educator is ICT. For free education, check out his YouTube channel, The Inner Circle Trader. With that being said, this channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. I am not a financial or trading advisor. Please trade at your own risk. Now, I want to start off this video with showing some appreciation. We're almost to 220 subscribers, 1/5 of the way to 1,000 subscribers. If you're not subscribed, hopefully we can earn your subscription at the end of this video. If you are subscribed, thank you so much. Now, if you haven't seen the video where we talk about ICT, how he pretty much says, um, like all this is all you need to do to quit your job. If you haven't seen that video, don't worry. I'm gonna pretty much replicate what was in that video into this one, but I do have a list at this point. If you haven't heard what he says, this is what ICT says. If you do this 90 days, you will quit your fucking job. Watch.
Enjoy. Job to do is find something that repeats every day and yield you 5 handles. Here's the easiest, most straightforward ICT ledger. Ready? Watch price in the morning between 9:30 and 11 o'clock. Wait for price to run through a liquidity above or below. Don't even have a bias. See an obvious run above a high or relative equal highs, and then reject that. I want to see an opposing liquidity pool. I want to see it move sharply in that direction. Once it does that, any fucking fair value gap, any of them, once that occurs, as soon as it trades in the fair value gap, I'm using that. I'm putting a 5 handle stop loss on it, and I'm waiting for it to rip. 5 handles, the trade's coming off, and then I'm waiting for the trade to be opposing liquidity. There it is. And in 90 days, I'm quitting my fucking job.
There you have it. If you didn't hear it that well, you could go to Instagram, Trader Theory, at Trader Theory. Go search them up at Trader Theory. Shout out to Trader Theory. It's TRADER Theory, THEORY, and it's his upload March 16th. March 16th, he uploaded that video. That video and sound is, well, not the video, but that sound is from one of ICT's previous Twitter spaces. And he pretty much stated that 90 fucking days you will quit your job. And what he stated was he pretty much talked about his 2022 mentorship model. If you haven't seen his 2022 mentorship, check it out. It's phenomenal. It's got a lot of great information in there. So he pretty much put it like this: from 9:30 to 11, you want to look for liquidity. As soon as you see that liquidity, you want to see it get ran out. Once it gets ran out, you want to see a sharp displacement, sharp move toward opposing liquidity. And any fair value gap, he said he's taking entry off of that. And he's targeting opposing liquidity. So I have it written right here step by step for us. What I'm going to do is, this is specifically for NAS 100 NASDAQ. He uses the E-mini. I'm not too familiar with it. I've always been, I'm pretty seasoned in just this chart. It's pretty similar, same thing in my opinion, but you can still apply it the same way. So I'm gonna scrunch up this chart. This is live trading price right now. I'm gonna scrunch it up. So you can't argue that we have any idea what's going on at all. Nobody knows what's going on. We can't see what price is doing, and I'm just gonna scroll back in the past. I'm just gonna go back in the past. And what I'm gonna do is I'm gonna take the replay button and I'm just going to place it right here on a random day. Random day. Matter of fact, I'm going to place it again. Random day. Okay. Now, we have no idea what is going on. You just see this big flat line. Now, we reset it. This is March 28th. It was a Tuesday of 2023. Today is March 31st. Okay. So, matter of fact, let's go to the 1 hour and do this. We're going to scrunch it up more. Let's go to the 1 hour so we could go a little further back, okay? We're going to scrunch it up more. Go back further. Random day. I don't know what day it is. I don't know what's going on. Y'all don't either. Can't tell me you do. So we come right here to our charts. And this is a random day right now, okay? So step one, time. Delineate your 9:30 and 11. So if we go right here, where is 9:30? The next day. So we want to go the next day. We want to delineate 9:30. 9:30 is over here. So 9:30, we're going to delineate it right here. We're going to delineate 11. Boom. So now we're going to let price play out. Wait till it gets to these points. As soon as we arrive, 9:30 specifically, right? That's 9:30. Yep. 9:30. Okay. So right here at 9:30, step two, liquidity. You want to identify and annotate the first 5-minute buy side and sell side liquidity swings we come to before 9:30. That price can run out. You want to also observe after 9:30 for any swings that form. These can be ran out as well. Also recognize if price is currently now at 9:30 running liquidity. If it is, then right at 9:30, you want to be looking for the market structure shift explained in step 3. Okay, so let's go look for our liquidity right now. So right at 9:30, we look to the left. I see liquidity right here. And just to be specific, everyone, you want to make sure whenever it comes to time that your time down here on TradingView is set to UTC -4 New York. Okay. These are New York specific times. Okay. And this is the 9:30 to 11 that you want to specifically look for this and for this for. Okay. So right here we have this liquidity here. And if you notice, we kind of have a little bit of liquidity right here. It's kind of just like consolidating a bit. But if you notice, we kind of just tapped into it right here at 9:30. So what right here at 9:30, we could potentially drop to the 1 minute now. Well, that's step 3. Let me explain. Step 3, market structure shift plus displacement. As soon as either buy side or sell side, doesn't matter which one, because again, you don't need a daily bias with this. ICT specifically said, don't have a daily bias. Okay. Right here, it doesn't matter which one, buy side or sell side, gets round out. At that very moment, you want to drop to 1 minute and annotate the current valid swing point for market structure shift and wait patiently for the market structure shift and displacement candle to shift and close. And if a new valid swing point is created, delete the old annotation and add a new one. Okay, so let's go ahead and demonstrate this. So as soon as that sell side, because this is sell side liquidity and this is buy side liquidity, as soon as that sell side gets ran, you drop to that 1 minute, boom. Now from here, the valid market structure shift point, if you don't know what the swing is, it's pretty much a candle that has the 3 closes like this. So let's say that this is a candle, this is a candle, and this is a candle. This is how the wicks have to look. This is a swing low. And obviously, reverse that, and that's a swing high. It has to be 3 candles, and these have to be higher than this one for a low, and they have to be lower than it for a high. Okay, so you want to see right here, this high, the high up here, H, you look, high 12114.8. 12114.8. They were equal. So in the situations where they're equal, that's still a swing. Okay, so this is a valid market structure shift point at the moment. Okay. But after that, you can see that this candle closed and then it created this swing from this one, and this one. This is a valid market structure shift point. So we would want to see this one get ran with displacement. Okay, now that it's running more liquidity, it just ran out more liquidity right here to the sell side. Boom. This is the new valid swing point. This is the new valid swing point. That's a market structure shift, but there's no displacement. Came down to grab more liquidity. Here's the valid market structure shift point. Let me delete these right here. It ran out liquidity right here. Valid market structure shift point. Ran out more liquidity right here. New valid market structure shift point right here. Market structure shift and the displacement candle. There it is right there. Okay, so at this very moment, we want to wait for the next candle to open, close, and then we'll look for step 4. As soon as price shifts structure with displacement, annotate the displacement high and displacement low, and within that range, identify, is there a fair value gap? If not, then we have no trade. If there is though, then we will annotate the fair value gap. Okay, so if we go right here, this is displacement high. Displace. And this right here is a displacement low. Just gonna put D/L, and I'm gonna just put D/H. Displacement high and displacement low. Okay. So within this range, we gotta look for the fair value gap. So let's see if the next candle creates that. Right here within this range, from here to here, do you see a fair value gap? Now, what is a fair value gap? Well, simply put, if you look right here, from this candle, this black one right here, this candle's wick, and then this big move, and then this candle's wick. See how from this candle's wick to this candle's wick, there's this gap right here? There's this empty space. Well, price often likes to, trade where they don't have any spaces. Like price usually likes to not leave any gaps. And if it does leave gaps, it'll fill them right away. You can see if it leaves a gap, it'll fill it up. It'll fill it up. If it leaves a gap, like right here, it'll fill it up. Because oftentimes if it leaves a gap like right here, it'll fill it up. So right now, we want to anticipate, we're going to go ahead and annotate our fair value gap. And we want to anticipate price to come into here. Okay, this is step 5, limit order. Once we've identified the fair value gap, we will set a limit order just slightly below or above whichever one we're looking at do in this situation. So in this situation, since we're looking to buy, it's going to be a little above, just slightly above the fair value gap, because we anticipate price will come back to fill in that gap. Okay, So right here, we're going to take this buy. We're going to put our entry just slightly above it. The reason why we're going to put it slightly above is for spread reasons. Price can come, tap the fair value gap, but barely. It can come like right here. And you can have your entry right here, but because of spread, you don't get tapped in. You know what I'm saying? It's interesting, I know, but unless it's happened to you. Anyways, I apologize about the little interruption. So to pretty much kind of explain, this is our limit buy. So we're going to take a buy here. Our stop loss is going to go, stops will go below the first candle of the fair value gap pattern, because since it consists of 3 candles. So since the gap is this candle's wick, then this big candle, and then this candle's wick. See, it's 3 candles, 1, 2, 3. The stop will go below this one right there. Boom. And we'll just round it to 12 pips. Boom. Okay. So at a 1-to-1, we will take 50% of our trade off, and we will cut 50% of our risk out of the equation. Okay. So we'll move our stops up 50% of the way. So let's see what happens. We're triggered in, and that's ugly. It was ugly, but also really, really awesome. That's why we don't put stops right below this candle, because we would have got stopped out. That's why we put stops below this one. 1-to-1. So now we cut risk. Let's say we risk 1%. This is currently a 0.5% win so far. And we have 5%, 0.5% running. Okay, let's see what happens. 1-to-2. Now, right here, target, you want to target opposing liquidity specifically. ICT says to target opposing liquidity. So we have this liquidity up here, but we also have a lot of liquidity like all throughout here. There's liquidity just all built up like around these areas specifically. So we have likely targets that we could hit a 1-to-2R. Let's see what happens. Boom, 1-to-2R hit. At this point, you could claim your 0.5% running. It'll be about 1% total, and it'd be a 1.5% total win for the day. Or you can claim partials again, and then at that point it would be so since it's 1% up right now, you'd claim another 0.5, so then it'd be 1% win for so far for the day, and then you would leave 0.5% running. And at this point, you need a 1-to-4R for that 0.5% to go up. So like if you targeted right here, which is a 1-to-3R, let's see what happens. We'll do the math whenever we get to it. But at this point, you can move your stops to break even. You still are in the position. There's tons of ways to manage your positions. You know, it's totally up to you and how you like to manage them. But boom. So I hit a 1-to-3R. At this point, let's say that you had 0.5% running. Well, now since I was now there this right here, you would be total in profit 0.75%. The reason why is because at 1-to-2R that was a 0.5%. So at 1-to-1 it was a 0.25%. So times that by 3, currently you're running 0.75% in profit. So currently if you close, you would be up 1.75%, or if you just claimed half, that'd be what, like 35%? No, because 35, that's 70. It'd be about like 33%. It'd be about 38% that you would claim right there. So You could do 38%, and now you have 38% running at this point. Honestly, it'd probably just be best to claim at a 1 to 3R. You'd be up at 1.75%. Um, in all honesty, I would probably claim at a 1 to 3R. That's a nice, really nice move. 1.75% gain. Or if you didn't claim any profits at all, ICT does say pay the trader, but if you weren't that type and you totally just wanted to hold your position, you could have held 1 to 1R, that's a 1% win, 1 to 2R, that's a 2% win, or a 1 to 3R, that's a 3% win. But it definitely depends on you, because it could hit a 1 to 1, you don't claim, it could go straight to your stop and you become a loser. It could go to 1 to 2, you don't claim, and it goes straight back to your stops and you become a loser. So it's totally up to you how you want to manage. Do you want to be a winner at the end of the day, or do you want to be a loser? Or, you know what I mean? Do you want to move your stops to break even and break even for the day on a potential win? It's totally up to you. But this is just one example. If you want to see more examples in future videos, definitely let me know in the comments down below. Thank you guys for those of you that have been commenting. You guys have been, you know, um, making me smile. It's been really cool. All corny. But again, my name is Hotshot. Um, thank you guys for watching, and I hope I earn your subscription. Drop a like, comment. We'll see you guys in the next video.